Hello, my name is Isai Cortez and I am the founder of SynkBooks, and I wanted to make a video titled Why QuickBooks is Not Necessary for a Majority of Small Businesses. I know a lot of people probably won't like that. A lot of people use QuickBooks, but this is sort of my reference and from my point of view. So the title of this is called Positioning of SynkBooks, Why an Easier to Use Bookkeeping System is Better for Small Businesses That Don't Require Complicated Accounting Systems. So I am a tax lawyer, a tax litigator. I fight cases in front of the IRS, in front of the United States Tax Court against the IRS. I'm also an adjunct professor. And so this is something that is really dear to me and something that I help a lot of people with. So what I'm going to be answering here is, what is bookkeeping? What does the IRS require for bookkeeping? And why is an easier method of bookkeeping better for small businesses? So a simple search of what is bookkeeping, you'll find here a bunch of different resources of what the IRS considers bookkeeping. The first thing I'll bring up here is topic number 305. You can find all these links I'll provide for you all in the sheet. So if you want to look it up yourself, you're welcome to. So business income and expenses. If you're in business, there's not a required method of bookkeeping you must use. So it doesn't require QuickBooks. It doesn't require anything specifically. You can just use a pen and paper. Actually, Rachel Fish, a very smart woman that I just spoke with earlier today, said the biggest competitor to QuickBooks was pen and paper, because that's all you actually really need. And so here is something straight from the IRS's website that tells you what you need. I think the genius of QuickBooks is that they make you think you need QuickBooks and you need something like QuickBooks, but all you really need is a method, right? And the IRS continues and says, however, you must use a method that is clearly and accurately reflects your gross income and expenses. The record should substantiate both your income and expenses. Essentially, they're saying, if we were to audit you, could we go back and find out what you did, right? Is there a method for us to know what you're doing and what you're up to? So that's essentially what they're saying. So the method is anything, right? The rules do change for other companies. I believe if you're over $25 million, it requires GAAP accounting. And so hope you get there, and I hope you get a big team of accountants. But I'm talking about small businesses. Generally, I like to focus on companies that are 5 million and under. So when I'm talking about this, I'm talking about companies that are 5 million and under, right? And so method of bookkeeping, essentially anything. So SynkBooks, in a sense, is just an easier to use method of bookkeeping, just using your bank information to streamline the process. So we categorize in a way that's a little bit different than what QuickBooks does, but essentially a similar function of categorizing expenses as they're downloaded from the bank feed. So the next question the next point of reference that I have here is, what accounting method must you use? And so there's two methods. There's cash method, which I think a majority of businesses use, and then there's accrual method. And so I'll just read it here. Most individuals and many sole proprietors with no inventory use the cash method because they find it easier to keep cash method records. However, if an inventory is necessary to account for your income, you must generally use an accrual method of accounting for sales and purchases unless you are a small business taxpayer, defined later in this chapter. For more information, see this other stuff, blah, blah, blah. It'll take you to a different part. Accrual, under an accrual method of accounting, you generally report income in the year earned and deduct or capitalize expenses as they in the year incurred versus when you actually pay them out. So you're incurring it now. This is when you record it, right? An interesting thing as well is there's a method of combined method, and this is what a lot of people I see do that use accrual method. It's cherry picking. They take the expenses as soon as they incur it, but the cash is not until it actually hits their bank account. So I do see this to happen quite often. So we use mainly, at least for now, for SynkBooks, it's cash basis. So if you need accrual, my software is probably not the right one for you today. Later on down the road, maybe we'll build it out. But for now, this is the way SynkBooks works. And so another thing, cash, right? And then here's a publication that kind of breaks this down into more detail. I I love these publications because it kind of gives you a point of reference for the IRS and what they're thinking. And these are never complete. There's always more to this, but it gives you something that you want to think about of what the government, where their mind's at when they want you to see your records and your bookkeeping. So the next thing is accounting limitations on this. And this is essentially from Code Section 448 of the Internal Revenue Code. And it tells you that anybody can use the cash method, but then there's a limitation. So C corporation, partnerships which has a C corporation as a partner, and we'll disregard the tax shelters for now, but there's a gross receipts test. And if a corporation has over $25 million, then you can't use the cash method. They want you to use accrual method. And I believe in one of the other rules, they require GAAP accounting as well. So, you know, you could use my software up to 25 million. I suggest you don't, because you need, if you're making $20 million, you need a complete different suite of accounting resources, right? So mine, again, is small business. I try to focus on 5 million and under. So, but this is giving you, again, nothing here says use QuickBooks or don't use QuickBooks, or this is the only method of using QuickBooks, right? This is just an accounting method. And this is generally going through the Internal Revenue Code. The publications basically giving you guidance on how to maintain your books and records. So this is what we have so far. So record keeping, this talks about how long you should keep your records. General rule is usually 3 years, and I'll go to that in a little bit. But this is basically what they want you to do. If you get audited and you had like a $7,000 expense, can you go back and find it? Is it in your bank statement? Did you pay for a really expensive computer? If you are a video producer, things like that, that's what they're looking for. So they want to make sure that you can substantiate all your records. And again, this is just a general rule for being able to go back and reconcile if you get audited. Again, no specific way of doing it. You can do it your own way as long as you can go back and reconcile. Finally, how long should you keep your records? 3 years. Keep records for 6 years if you do not report income that you should report and it is more than 25% of the gross income. 3 years is general rule. I tell people just to keep it as long as they can. I've litigated cases or not litigated, I've actually fixed cases, controversy cases where records of 30 years ago were actually helpful in like a sale of a house or something like that. So, something to just think about for yourself, right? So as you go through this progression of what I just went through right now, nothing is requiring anything like QuickBooks or anything like that. It's just generally like, hey, do you have a system, right? And so finally, why is an easier method of bookkeeping better for small businesses? In my opinion, as someone who litigates cases, look, I will always have a lot of respect for accountants, CPAs, EAs, and whatever else goes into that category as far as like a tax pro, because I will consider them to be extremely like gold standard. And I think if you can afford a CPA or something like that, an accountant to help you that knows what they're doing, then it's a good thing, right? And most of my audits come from people that don't have a good accountant. So most of my clients that I would represent they did it themselves, or Uncle Bob, who took one class in accounting 20 years ago, was helping with the books, right? So those are the people that usually come to me and they're like, hey, I don't know what's going on. And so they pay me as a tax lawyer a bunch of money to fix the problems. So for some people, definitely QuickBooks, an accountant, and the whole deal, like if you're making a bunch of money, like I think it's good for you. Is that necessary? No, not in my opinion. So 3 things that I noticed that people care about: how much money did I make, where did my money go, and how much do I owe, right? Another really exciting part of the conversation I had earlier today with Rachel Fish was, she's like, some of the small businesses really care about is they just want a tax return at the end of the year. Like, and that's essentially that, you got mom and dad, they own a restaurant, they're making $600,000 a year gross at the burger joint that they own, but they're sitting there all day working and trying to they don't have time to sit down and go through all these records and financials. They just want to know those 3 things, in my opinion. How much money did I make? Where did my money go? And how much do I owe? So this is kind of like I'm laying the foundation of why my software is important and why it's positioned to be in a really good place for bookkeeping and what small businesses need in America. Thank you.